Hi, everyone. This is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is Ryan Jordan. He's a college professor, and he's also an author, and he's also a content contributor for both Financial Sense and Wall Street for Main Street. So he's here to talk about silver for all listeners out there. Thank you for joining us here today, Ryan.
Thanks for having me, Jason.
Great. And, we've spoken in a lot of emails, Ryan, in the past, especially about silver, because you know a lot about silver. You have some really great articles on it on the Financial Sense website and on our website, and you just have a new book out about silver. So as far as that goes, have you seen anything materially changed in the silver story in the last 12 to 18 months on either the supply side or the demand side?
I don't think much has changed all that much, the possible exception being solar demand down a little bit, but we still have very strong investment demand. The real story here over the last couple of years, as you well know, is the investment demand story. Eric Sprott just did a large offering a few months ago, and the silver market, can only withstand so many Eric Sprotts trying to take delivery of silver, whether it's $100 million worth or $200 million worth. It's just the silver isn't there. So I think that the silver story is steady as she goes. I know we had a big sort of little mini mania last April. I think all of us were expecting some kind of a correction, but the trend is higher, and I think that the long-term fundamentals are certainly very strong for the metal. And in my view, you never know when you're going to have a large avalanche of people trying to get in, or a large bunch of people trying to get in, and again, they'll discover that the metal isn't there.
And those are some good points, Ryan. And right around, I think, April of 2011, when silver was around 48, I wrote an article for Financial Sense, and I don't write that many articles for Financial Sense because I prefer to do these podcasts instead. And I wrote an article about, buying puts on your silver in case you don't, or taking some gains for your long positions. And the article wasn't very well received because there was a lot of people at the time saying that silver was going to break out, over 50, it was going to go to triple digits, and I was like, yes, there's a possibility it could go to triple digits, but you don't want to not be prudently taking some money off the table. If you bought some silver shares at $4 and they went to 30, there were some silver stocks that had over 400% gains during that big run, and there were people now who are cursing themselves or kicking themselves for not taking any money off the table and having any cash to buy more at these levels.
Well, that's always true. I mean, risk management is key. It's important that you be diversified, or that you be comfortable with what you have, and that, if you're in this as a speculation, then you do want to think about a way out. Of course, I recommend people have their silver. It's your monetary insurance. It's not something you want to speculate with, and the vast majority of people have no silver. But that's right. If you're in that situation, you want to sell the rips and buy the dips. I think sentiment right now is certainly a far cry from where it was last April in 2011, and I think that it's a good time as ever to buy more. But you're right, risk management is key. My view is, though, most people are not properly diversified in the direction of having enough tangible assets, not that they have too many, in my view.
That's very good. And you already touched on the demand side, and to a large extent, the demand side, especially for investor demand, I see it continuing to grow for the large accounts. In terms of the retail purchases, there's not a lot of retail money right now buying physical silver. Those numbers have dropped because the paper price dropped, and people, are just not disciplined to go in there and buy the dips, like you said. But in terms of those very, very large orders for physical, that's where the divergence in the market is occurring. When someone wants to go like Eric Sprott or a 5 or 10 million ounce order, the physical silver is really just not there on the LBMA. People have to wait many, many months. So I think that's something that the market is not taking into account yet, or it's completely discounted, because a lot of these long speculators on the commodities futures, they never take delivery of the actual silver on the contract. They just want the paper price gains from actually speculating on a low silver price, and then they'll sell into strength on a rally, and they won't actually take any physical silver.
That's correct. No, I think you've summed it up well. That is, there are sort of two markets. There's a paper market and there's a physical market. You also have a number of different kinds of investors. Historically, the silver investors, because the market is so small, it does rely on retail investors either buying coins or doing their buying through these various bullion trusts or a gold money or a bullion vault that you hope actually that the metal is there. You're right. Retail investors are important, but they're not the only thing that can drive this price. I mean, you look at the Hunt brothers in the late 70s. Look at Eric Sprott today. Not saying he's the same as the Hunt brothers, but the demand could come from anywhere. I'm also not quite convinced we have a good handle on what's happening in China. So I know when you say that demand is down, retail, yes, U.S. coin demand is down. I guess probably it's also down in Western Europe. I'm not sure we know what's going on in China, and that's a big change in the last several years. Is the liberalization of the market in China that can potentially bring in millions of more investors. And again, to repeat, the actual real metal is not there for those millions of Chinese investors.
Yeah, I agree. And the SLV is also used as basically to cover a lot of holes by JP Morgan as a custodian. So if there's some silver deficit, someone needs a large physical order, the silver is taken out of the SLV, and then it's refilled very slowly, and that's meant to, I guess, help keep the price managed, in my opinion.
It certainly is possible. You are right. The SLV is a huge they're the big elephant in the room as far as stockpile of silver. I think they're the single biggest or one of the single biggest stockpiles above ground silver, and we don't know to what extent it's a fractional reserve Ponzi scheme, quite frankly. So you're right about that, and that's, again, this is why I always encourage people to buy the real metal. And with silver, though, unlike gold, because the market is so small, and people, it's not that expensive to buy $5,000, $10,000 of silver. It is possible for average people to really, take revenge and to move this price. And governments and bullion banks, apart from the SLV, they don't have a lot of silver to play accounting games with, like they do, for example, with the gold market and central banks, which has come up recently with Germany, wanting or wondering where some of its gold is. So I do think that eventually, the average person does have the capacity to move this market, and I'm surprised it hasn't happened already. That's sort of my perspective is, believe it or not, sort of why are these prices so low? That's kind of what got me going on the book in the first place, was in 2008 actually seeing silver drop 40% on paper, as I'm sure you'll say. But I think people really are still complacent, and most people have very little exposure to this metal.
Yeah, and in 2008, 2009, that's when I first started to buy silver because I saw the price smash. I woke up, I learned about some of the manipulations, some of the games in the gold and silver market by reading Ed Steer's free newsletter about GATA and all those things. And I didn't start buying immediately because I just want to soak up the information. It sounded too good to be true. I was like, I'm reading all the stuff. They're pointing out all these things in the charts, all these facts and figures, and things are happening the way they're saying. It sounds too good to be true. And when the price smashed, that's when I started buying. But on the supply side, though, I mean, the grades for the silver that we're mining now, like silver is a byproduct, so it's attached to gold, it's attached to copper, it's attached to some of these other base metals, and the base metal prices have been declining. So that's going to start to put a nice price floor into silver too. With the grades that are declining, especially in a lot of the silver mines, because you're seeing rapid grades decline in silver over the last 7 to 10 years, do you think there's going to be a price floor then in silver? Maybe do you think the days of $15 or $15 silver valued in U.S. dollars are close to an end?
You mean as an actual price for silver? Yeah, I think it is. I keep waiting for when we sort of peak out in terms of silver production. The supply is growing, unlike gold. Silver supply is clearly growing. But
the growth, sorry to interrupt you, but the growth is coming at a cost of the grades, though. The grades are just rapidly declining.
I agree, and that trend has been in place for decades, and I keep wondering when it really is going to show up. In people not being able to mine silver. It's remarkable when you realize you mentioned declines in ore grades. It's something like 90% over the last 4 or 5 decades. It's amazing how hard it is to extract silver. I don't think a lot of people realize how hard it is. As you say, it's a byproduct of other metals. It's not easy. So yeah, I would expect on the supply side, there shouldn't be huge increases in mine supply, and I'm waiting for peak silver.
Yeah, I mean the peak silver. It's by peak silver. I think it's kind of like with the peak cheap oil argument, where there's a lot of oil supply left, but none of it is that cheap light sweet crude that's easy production cost that comes out of the ground at $10 a barrel or less. And I think that's what's happening in silver and gold too, because you look at a deposit like Alexco's, which is the highest average grades of any primary silver deposit in production basically right now, and those grades, which are around 800 grams per ton, those grades were pretty normal about 80 to 100 years ago, but now those are by far the highest grades, and people are falling all over themselves for grades like that. They can really not find grades like that. A 50 to 100 grams per ton silver deposit now is considered pretty economic. So it's pretty amazing how much the grades have declined, and all these companies are touting themselves. You see some of these juniors with a large amount of silver resource, but it's only like 100 or 200 grams per ton silver.
That's correct. No, it's been a problem for a while. It's not getting any better. And as far as peak silver, what I mean is that in the past, and I am a historian by training, that's where I come from this. You have had periods where, for decades, almost for a century, where the supply has just sort of so it's hard to know what's going to make supply peak out, at least for a while. It doesn't mean that silver has peaked in an absolute sense, but it can certainly go nowhere for a long time.
And you brought up financial history here, and we've covered the supply and the demand side already now for silver, I think, in depth. Okay, now that we've covered in depth the supply-demand fundamentals for silver, Ryan, let's transition here to another subject. There's a lot of people in the inflation and deflation camp, and there's a lot of mixed opinions of silver. You're a historian. I was actually trained as a historian, too, and I wasn't exactly trained. I was trained, as a conventional in the conventional university system, and since I've woken up and started reading accurate monetary and financial history, what has been silver's role as money in the past? Has it been used as much as gold, or is that inaccurate?
Well, up until about 60 or 70 years ago, there were many times when the value of the world's silver was actually greater than the value of the world's gold. So silver certainly, for thousands of years, has been money. Up until the 18th century, most historians talk about a silver standard, not a gold standard in the world. The gold standard is a recent phenomenon, relatively recent, that came out of Britain in the 18th century, really, and came along with the rise of central banking. So I would say for thousands of years, up until the mid-20th century, not only was silver money, but it was more widely used, more widely held, than gold was, and so absolutely silver is certainly is money. I was just joking. I actually just got a silver quarter a few weeks ago. So there's still some silver actually in the change. You can use a silver eagle to buy stuff. It's debatable about what can you use the bullion content versus the actual amount stamped on the coin. But no, I certainly think silver is money, and it certainly has been for thousands of years.
Yeah, I mean, China was on a silver standard, right, prior to World War II and prior to the Communist Revolution there.
Right.
And when they went off the silver standard, I think when FDR, right, started as part of the Smoot-Hawley tariff, when he started overpaying for silver, all the silver left China and came here to the United States, and then China hyperinflated.
Mm-hmm. Yeah, the silver nationalization in the 30s that went along with the gold confiscation that Roosevelt did, it knocked a lot of countries off of silver, because the U.S. was artificially, overpaying for silver, building a huge silver stockpile as it was building a huge gold stockpile. So many countries had to go to paper money, or decided to go to paper, and China being among them.
Well, in addition for gold and silver as money, do you think then that silver would do well in a deflationary environment where the powers that be, the Federal Reserve and others, didn't print money? They allowed a bank like Lehman Brothers to fail? Or do you think that silver then would collapse in price relative to gold?
Well, I think for one way to answer that question is to look at 2008, where the price of silver, once we got through the fall of that year, silver I think began 2008 around 13, 14. It was back to 13, 14 by early '09. It was basically flat. It was gold that did better. So I'll concede that in recent history, gold certainly seems like more of a deflation hedge. But when you go back further in time, and actually Roy Jastrom, who was another scholar, looked at this, silver did also function as a crisis hedge. When banks went under, you would see huge premiums on physical silver, which, by the way, you also saw in 2008. So back in the 19th century or earlier, people scramble for real cash, for the most solid kind of money, which is the monetary metals, gold and silver. They may also scramble for platinum and palladium, but those metals are, it's the best kind of money that there is, which is an important point. And again, silver has in the past benefited from that. Although, again, I'll concede that in 2008, gold, I guess, did better in that deflationary environment.
Yeah, because there's a split, like I said, among a lot of the financial community that they don't view silver as money. They view silver as too much as an industrial metal, but they haven't studied financial history as much as you and I or someone like David Morgan or others have. And I think, it's our job to give them the sources and prove to them that we know what we're talking about with regards to silver, and that silver is also money.
Well, it is, and you're seeing movements of people, not a lot, but you don't need a lot of people to do this. You've got the movements to essentially remonetize silver in like Utah or other states, legislation at the state level to try and bring back gold and silver in transactions. You have, I hate to talk about the label people, but you have libertarians or other groups, the Ron Paul movement or other movements it's a grassroots movement to bring back silver, to use silver in some form. And so, people will vote with their feet. They will decide what is money. I think those who talk about gold as only being money, they're saying, well, central banks only have gold. The big money only has gold. And that's true. But my whole point is that the market in silver is so small that it is possible for average people to, bring it back relatively easily and to have an impact culturally and legally by trying to transact in silver. Again, not just save in silver, but also to try to use it and to mobilize it. And that we have seen that movement. And again, Dave Morgan's been involved in that as well. So it is a kind of a populist sort of movement. Again, not very large, probably no more than 1 million people or 500,000 people in the world, but they're vocal and they are slowly changing things.
Yeah, and I think that's good. It's coming from the ground up. It's very grassroots, and it started because of the internet and all the YouTube videos. And you had that great YouTube video that David Morgan helped go viral recently, which I think is great. I view gold more as, like you said, it's the money of the kings, it's the money of the political class and of the very, very rich. And maybe you use gold for very, very large transactions, but for everyday transactions, you don't need gold to do everyday transactions. You want to use something that's easier, that's smaller and smaller denominations, and I think that's where silver comes in. And I am more of a fan of a bimetallic standard and competing currencies because I think gold and silver, like allowing the market to use gold and silver to check each other, is an ideal situation, as opposed to just going immediately back to a gold standard and letting the government try to fix and then screw up the price, kind of like what happened in after World War I with the gold exchange standard.
That's correct, and that was what I was saying earlier about the creation of the gold standard. It paralleled the rise in power of the Bank of England in the 17th century. It was about centralizing power. It was about the elites shoving something down the throats of average people. So ideally you would want competing currencies. Ideally you would want a decentralized system. And it's something Dave Morgan said. He obviously favors, he's a believer in silver, but more importantly, he believes in honest money, as do I. And that could come in other forms, I guess. And I think the main emphasis is on competition, and it's on individuals not always trusting or believing in the dominant system to protect them or to be there for them. And so I think that in that sort of we call it anti-monopolist sort of view, silver certainly plays a role. But yeah, I also am not advocating going back to a standard because there's still a human being or an institution that is dictating what the price should be, monopolizing things, and that's not.
And then setting the ratio too between gold and silver, if there is a ratio, which I think like the government decreed ratio of 16-1, especially when we just outlined earlier in the interview the mining grades and some of the other stuff, and you outlined in your video how now there's less above ground silver in bullion and coin form now than gold form, then the ratio then should not be a government decreed 16-1 if that's going to hold true, and the supply side for silver is actually going to strengthen.
I agree. Yeah. No. That's very true, and that is again the problem with monetary systems is that money is a kind of coercion by the state. It's a way for bankers or the government to force people to transact in something, and a way of confiscating and stealing money.
It's a tax.
A tax, exactly, and that's ideally I would. It's good to see grassroots efforts to do something else, or to bring back silver or some other honest monetary system.
Well, I have one more question before we wrap up the interview here and let you talk about your book. It concerns the gold to silver ratio. I think David Morgan has said repeatedly that silver comes out of the Earth's crust compared to gold at about a 9 or 10-1. As this bull market progresses, do you think we're going to see the gold to silver ratio get to those levels, or perhaps more in favor of silver? Or do you think that people are not going to study financial history like you and me, and that they're going to discount silver at maybe at most like a 30-1 ratio to gold?
Well, I think we can at least get back to 1980, where we were briefly at 16 or 17-1, and I would agree. I would expect the ratio to narrow even more. Again, it wasn't that long ago that people did value silver at again briefly in 1980, a 16, 17-1 ratio. So I think we can certainly narrow it a lot. And I have the trend is your friend, I guess that's the saying. I think that over time, it may take years, may take decades, I think that people will rebalance their portfolios, and there is that whole risk management issue, but people right now are still so locked into bonds or even the other kinds of paper wealth stocks. Tangible asset investing is still thought of as kooky, and I don't think that's going to remain the case, but I think it will take time. So I do expect the gold-silver ratio to narrow considerably in the coming years and decades. Who knows if silver becomes rarer than gold, or silver becomes more valuable than gold, but I think the ratio will narrow,
Yeah, I think as this bull market progresses, once more people, the mania crowd comes in, like with the tech stocks and those types of things, driving up the trend as it nears its end. And we're nowhere near the end, in my opinion, for the record. But I think as we get towards the end of this, and there will be an end stage at one point eventually, unless gold and silver are fully remonetized by the market and by governments as money, I think we could see a gold to silver ratio of 10 or perhaps less for a brief time, but then I would be looking then to perhaps start trading in my silver for other productive assets or farmland or real estate or something like that, because that's what history dictates on the gold to silver ratio, is when it's probably time to get out.
Yeah, I agree. I mean, again, to repeat what I said earlier, I do think people always want to have some monetary insurance no matter what, but if you have a large speculative position, or if you let a position run and it's now a large part of your portfolio, I agree that at some point there is going to be a time to sell. I'm not sure that it's that near in the future, but you never know. And if events get away from people who think they run the world, or if we have a big collapse or big crisis, you could very easily see gold and silver begin to enter a mania phase. But yeah, I don't think we're anywhere near the mania phase right now.
Exactly, and I think we're in another shakeout phase here. We're very close to a bottom, in my opinion. I think we're very, very close to a bottom. For the mining stocks, they look good on the gold and silver mining stocks look good on the charts, on the GDX, and then the gold and silver price on the charts also look good. So I know that a lot of the retail money, unfortunately, is not disciplined enough to be adding more. They need to not check the price as much. They need to be disciplined, so when the price drops, they need to say, oh, okay, the price dropped $1 or $2 here, I'm going to buy more. Instead, we get emails into Wall Street from Main Street. We get text messages and phone calls from worried people. Should I sell out of all my silver now? It's dropped $2. That's not the way to make money as an investor or to protect yourself.
No, I couldn't agree more. And I think people, need to understand why they own what they own. If they own too much, you can certainly, wait for something to go up and take some off the table. But no, I think that the fundamentals are very much behind this investment. And it is too bad people get sucked into that sort of it's almost like a gambling element where they're watching the stock price or the metal price every day. I think that's unhealthy, and people should try and keep perspective and relax, I think.
Exactly, and it creates too much fear, and you're not making rational decisions. You're relying too much on your emotions. Ryan, as we wrap up the interview, can you tell our listeners more about your book and where else to find your work?
Thank you. Well, the book is called Silver, the People's Metal, and I tried to offer a concise sort of overview of the entire market, starting with history, we discussed earlier, so going back thousands of years, looking at the big picture of the economy, where I see the economy right now, and then also covering aspects ranging from how silver is priced at the COMEX to the industrial demand story to some of the legal aspects of remonetization and the movements to try and bring back silver. And I also try and cover and mention various individuals who've influenced me and sort of talk about the overall community of gold and silver investors. And I do make some comments as well about how you can get involved or how you can purchase silver and silver investments. So I try to make it a concise overview of silver, and it's hopefully, and it's not meant just for experts or for novices. I try to include a wide range of people as the target audience.
Very good. And do you write articles for anywhere else besides Wall Street for Main Street and Financial Sense, or are those the only two places where our listeners can find out your work besides there?
I also have sent stuff to forexpros.com, also Silver Bear Cafe, and I do have my own blog. It's just called ryanpjordan.com, and that's where you can most easily find all of my musings and writings.
Okay, great. And you didn't say where your book was. Is your book available on Amazon or a normal bookstore, or do they have to go to your website or another website to buy your book?
The book was published through CreateSpace. It's available through Amazon and Barnes & Noble online. I will eventually be getting a Kindle edition out as well. But Amazon, Barnes & Noble, and I think also Tower Books certainly sells it. I think Amazon's probably the easiest.
Okay, great. So thank you very much for your time, Ryan, and you definitely spoke a good deal amount about silver. You summarized the silver market very well for our listeners, and I'm sure they'll enjoy it, and hopefully we can have you back on soon.
Thanks. I appreciate it, Jason. All the best.